Hello, today we are solving May 2023 Unit 2 IAL paper. Question number 1. The statement of financial position for Buzkars PLC at 31st March 2022 and 31st March 2023 are as follows. It is given here, and apart from that they have given some additional information where adjustments have to be included in the above. Then for the first part A of the question, prepare statement of cash flow for the year ended 23rd March for Buzkars PLC. Okay, this is what we have to prepare. Statement of cash flow for 31st March 2023 for Buzkars PLC. So let's prepare it. The first, there are three parts to this statement of cash flow. We need to calculate net cash generated from operating activities. Okay, then we have to calculate what is the net cash from the investing activities and what is the net cash from the financing activities. So after adding up all of this, okay, it should be balanced by the cash and cash equivalents at the beginning and the end of the year. Then your cash flow statement will become, okay, is said to be correct. So let's calculate that. First is the net cash from the operating activities we have to find. This is our first step. Now we start off with the profit. Okay, we have to find what is the profit from operations. Okay, we have to find what is the profit from operations. Then we have to add back any depreciation. Okay, add any depreciation which would have been subtracted. Okay, so what happens generally in the profit is we would have subtracted depreciation. We would have subtracted even the loss, okay, happened as an expense in the income statement. So these are all non-cash transactions, okay, and that profit you would have got. Okay, like this is a profit. The profit they have stated is after interest but before tax for the year ended 31st March 2023 was this much. This profit which they give, it is not from profit from operations. Okay, so this includes, you would have removed or you would have lessened the expenses such as depreciation. This is a non-cash transaction. Cash flow statement will include only those which have happened, actual cash transactions has happened. So the others you have to include and exclude, which are not which needs to be included in the income statement as per the accounting, but these are not the actual cash flow transactions. For example, depreciation is a notional expense. The actual, it has not happened. Okay, this is as per the accounting concept you have to include, okay, and show it as an expense, but it has really not happened through any cash. Okay, and even for the any loss or profit on the sale, for example, here they have said there was a they bought something and it was the property was sold something. If it was sold for a loss or profit, we will have to find. If it was a profit, you would have added the income. Okay, you would have added the profit as an income. If it was a loss, you would have sold. Okay, you would have subtracted. So you will have to remove. Even this was a notional loss. You had assumed the cost was this much. It had accumulated depreciation and it was sold. So it is either a loss or a profit. The loss or profit is again notional here, because the actual loss or profit has not happened through a cash transaction. So these would have been removed or added from the profit given here. So these will all be added back. Okay, so now we have to first start up with the profit from the operations, which we will see, okay, how it is generated. Any profit from operations is before tax. Okay, any profit from operations is always before tax and interest. It is always, it means I have to take the profit before the tax and the interest payments have been done. So that indicates a profit from operations, and any notional expenses which were subtracted, okay, they will be added back, okay, and considered as profit from operations. So add any depreciation. If it was a loss or a profit, we don't know. Let's assume it is a loss, okay. So loss means you will have to add. If it was a profit, you will have to subtract from the sale of asset. So add any loss from sale of assets, okay. If it was a profit, you will subtract, okay, and then get back the profit from actual profit from the operations. So when you do this, what are you going to get? You will get operating cash flow before any working capital changes happened, okay. This is operating cash flow before working capital changes. What is working capital? It is current asset minus current liability. So now we have to talk about what are the current assets and current liabilities, okay, that has happened. So and then those working capital changes, we have to do some adjustment, okay. Working capital changes, the working capital are current asset and current liabilities, and they would involve actual cash transactions. So after getting the cash from the operating, okay, from the profit from operations, okay, that you will use, and you will adjust for any working capital changes. So what do you mean by adjusting the working capital changes? So let's mark it here. So the current assets, okay, which I'm going to include in this section, are for the operations only, for the inventory, trade receivables, and in the current liabilities I am going to include payables, okay, trade payables. These are from related to operations, okay, which I will get operations, okay. These are going to affect the operations, so only these will be included. Now let's look at what has happened to the changes. For example, here the inventory has got reduced, okay, that means I have sold off my asset, so which means cash, okay, inflow might have happened, okay, cash inflows happen. Any cash inflow you will add, okay, any cash outflow you will have to subtract. Here let's see the trade receivables. Trade receivables has also got reduced, okay, that means some customers must have paid back, so you will have to add back. Calculate what was the change, okay, change that has happened. The change is always the final minus initial, okay, you will take, but you will see whether it is a cash inflow or outflow for the business, and then you will have to add or subtract accordingly. So for example, this is a decrease in inventory, which indicate there is a cash flow that has happened, okay, because of the sale we can assume there was a decrease in inventory. Then trade receivables, some customers paid you back, there was a decrease, so the cash inflow has happened. And with regards to trade payables, okay, we can see that there has been an increase in trade payables. That means I have not paid back my suppliers, which is sort of cash inflow. So again you will add. So you will end up adding this because, okay, there is an increase in trade payables, always could mean I have not given any cash to the suppliers. So these are the things you will indicate and adjust the working capital changes. Okay, what is the cash from the cash flow, operating cash flow before working capital changes you will take, and now you will adjust for the working capital changes. So let's write the first working capital change, that is going to be inventory. Okay, so the first one is going to be inventory. Here we have to add, because add what? Any decrease in inventory, okay, that has happened. There is a decrease in inventory and I have written it there, add. Then you will add back the trade receivables, okay, add decrease in trade receivables. Okay, decrease in trade receivables. And then with regards to trade payables, there has been an increase, which is also sort of cash inflow. So I will add any increase in trade payables. My liabilities has increased, okay, and that means there has no cash outflow, or it could also mean it's a sort of cash inflow. So I'll have to add up, and then you will get the cash generated from operations. So after all these changes, you will get what is the cash generated from operations exactly. You less tax paid, okay, you will pay off the interest, loan interest payments, and then you will also pay off the tax, okay, less any tax payments, and finally you are going to get net cash generated from operating activities. Okay, so you are going to finally get this one here. Okay, so this is the net cash generated from the operating activities. So let's do this part. Okay, let's first calculate profit from the operations before tax and interest. Okay, so profit from operations. So as I told you, let's take this was profit after interest but before tax. Okay, so that was given here. So we have to find profit from operations. So I'm going to take and place it here, okay, for a working. To find what is, okay, but here they have given profit after interest was paid but before tax. Tax has not yet been paid, but this profit includes, okay, this profit includes profit after, okay, the profit after the interest has been paid. So I will I will add back any interest that was subtracted, okay, earlier. So this was the amount that is given to us, okay, but I have to add back any interest because I have already subtracted. I need interest, okay, interest also to be, I need a profit that was even before paying the interest. So because I have subtracted the interest, I will now add back the interest. What interest? That is loan interest. Okay, we are talking about loan interest payments. So we have two things here regarding the loan. Okay, what are the two things? First one is a bank loan here, okay, bank loan, and the debenture loan. Okay, because you can see here in the non-current liability you are talking about two loans and their interest payments. Okay, this and this one we have to include. So 8 on 30th September 2022, 8% bank loan of 1.1 million was repaid in full, and on 1st October 2022 a 7.5% debenture of 1.2 million was taken up. Now we can see that this one we are preparing, cash flow statement is being prepared for 23rd of March, okay, and these have happened in somewhere in between in 2022. So we have to calculate the interest only up to that period. Okay, so for example 8% bank loan, okay, interest, add any interest. So first one is a bank loan. Let's write bank loan. Bank loan interest of 8%, okay, 8% times 8% times, this was 1100, sorry, this was 1.1 million. You just copy that, okay, but for how many months? It would have started from March, April, May, June, July, August, September. Okay, so for 6 months, okay, from the end of March, okay, from the end of March, Okay, this has closed down in March. So April, May, June, July, August, September, 6 months. Okay, only we have to pay the interest because the remaining was paid off. So for the 6 months interest I will calculate, that is going to be equal to, so 8% of, okay, 0.08 times 100,000, okay, so divided by 2, so that is 44,000. So you had this much profit. I will have to add back these interest which I would have subtracted. So the first one is 44,000 bank loan interest I would have subtracted. I am going to add back that. Then debenture interest. Debenture interest, we can see that there was a 7.5%, okay, debenture interest at 1.2 million. So let's write that. So 7.5 percentage into 1.2 million, and this was started on 1st October. So let's start from October to March 23. So the interest payment is going to be for October, November, December, Jan, Feb, March. So it is again going to be for 6 months only. I will have to pay interest, not for the entire year. Okay. So that is going to be equal to 7.075 times 1/200,000 times 6 divided by 12. So that is 45,000. Now let's get profit from operations. So but we have not, tax has not been paid off, so we have that, it doesn't, so we already have profit from operations. If they had already subtracted tax, you will have to again add back that also. So you need a profit before tax was paid, before interest was paid. Okay, so operations is going to be equal to, so I am going to just add back all of this. So 1365, okay, so 1365 120 plus 44,000 plus 45,000. So that is 1454120. So that is going to be equal to 1454120 pounds. Okay, so this was the profit from operations. So let's write it here. We go back and we fill it up here. So 14, so let's write it here, 1454120. okay, 1454120 was the profit, okay, was the profit from operations before tax and interest was paid. Now you have to add the depreciation. So let's calculate the depreciation charges. Okay, that has to be added back. Depreciation, okay, calculation we have to do. So here we can see that on 14th April 2022, plant bought for 780,000 pounds with accumulated depreciation of the date 590,000 pounds. It was sold for this much. So let's adjust the depreciations. Okay, so already there was a provision of depreciation. So let's calculate the change here. So we can take depreciation at the depreciation depreciation at 31st March 2023. We have that ending depreciation. Any change you will calculate ending minus the initial value. So that is going to be equal to 2688,000. Okay. So 2688,000. Then depreciation charge at the beginning or at the 31st March 2022. So that is going to be equal to 2437,000. Okay, the change we have to calculate. What is the change that has happened? This is also this one, this is a notional one, this would have got subtracted, right? So I am going to add back all the depreciation which was subtracted. So the difference is going to be equal to 231. So 231,000. Okay, so 231,000. Now apart from that, okay, apart from that there was a plant with the accumulated depreciation that was sold off. This also you would have removed it. So I am going to add depreciation from sale, okay, which has been, which you would have also subtracted. So I am going to add back that depreciation also. So 590,000. Okay, all this you would have removed, okay, subtracted. So I am just going to add back to that profit to get the profit from operations. I want to get the total this thing. Okay, so now depreciation from the sale. So now let's add up these two, 231,000 plus 231, okay, 231,000 plus 590,000. So the total depreciation I have to add back to the profit is 821,000. Okay, this is what I will have to add back to the profit. So let's go and write it here. So the depreciation charge that's going to be added is 821,000. Then we have to add any loss or subtract profit. Okay, let's understand here. For this transaction, whether it was a profit or a loss, we have to calculate. Okay. Now the plant, the cost of the plant. Okay, the cost of the plant. So for this we know that the cost of the plant was this much. Okay, cost of plant was 780,000 pounds. Okay, and then it had an accumulated depreciation of this much. Accumulated depreciation of 590,000. So I am going to subtract that 590,000. So I will get the net book value. What is the value? Okay, which is supposed to get when what was the net book value at that point of sale? So 780,000 minus 590,000. So that is 190,000. Okay, that should have been the net book value I should have sold. Okay, if I sell it at this point, I will have no profit or loss. If I sell above this value, I'll get profit. If I sell at this below this value, I will be set to make a loss. Net book value of that asset. Okay, now I see that, but it was sold for, okay, sold for only 125,000, which is below 190,000. So ideally speaking, I have made a loss 125,000. So 190,000 minus 125,000, the loss is, so 190,000, okay, minus 125,000, so that is the loss is 65,000. This I would have subtracted as expense. Okay, this I would have, so I am going to add back to get the profit from cash generated from the operations. So that is going to be 65,000. Now let's add to get the operating cash before the working capital changes, and then I will get the cash generated from operations. So let's add up all the three. So you have 1454 120 plus 821,000 plus 65,000, that is 2340120. 2340120. This would have been the cash that was left generated before any working capital changes. Now the working capital changes has happened. Okay, so we have said decrease in inventory. I will have to calculate the decrease in inventory. Okay, what is the value I am looking at? So 983,000 minus 1057, three zeros. I am going to write the working here. So 983,000 minus 1057,000, the change, okay, 74,000, okay, that's 1000, but I will have to add this because it indicates inflow. So 74,000. Then add any decrease in trade receivables. So that is going to be equal to 743,000 minus 943,000. So that is going to be equal to 200,000. This also I will have to add back 200,000. And then you have to add any increase in trade payables. So let's calculate the increase that has happened. So 655,000 minus 592,000. So that is going to be equal to 63,000. So let's write it here. Now all this has to be added and we will get what is the cash that was generated from operations. Okay, so that is going to be equal to 2340120 plus 74,000 plus 200,000 plus 63,000. So that is going to be equal to 26,771.20. Okay, so 26,771.20. Then interest. Okay, interest, we have the two interest. We had already calculated bank loan interest and debenture interest, which is 44,000 and 45,000. So let's write both the interest here. So first one is the bank loan interest. Bank loan interest, and then we have the debenture interest. We'll have to subtract, okay, those interest payments. So which is the actual cash payments. Okay, these are actual cash payments, so I'm going to subtract. So bank loan interest was around 44,000. So 44,000, and debenture interest was around 45,000. So 45,000 we have to subtract now, and then less tax paid. So tax paid, okay, we have to calculate. It is 315. Okay, it is given here. The tax paid at the end of the March was 2022 was 315,000. That we have to subtract 315,000. So now let's calculate what was the net cash generated from operation activities. So that is 2677 minus 44,000 minus 45,000 minus 315,000. So that is going to be equal to 2273,120. 2273,120. So this was the cash generated from operating activities. Now let's calculate what is the net cash generated from investing activities. This is your second task. So what are the investing activities? I invested in property, I invested in shares. Okay, whatever the assets you have bought, those are the investing activities. So net cash from the investing activities. So let's see how much I have paid and what is the cash. For example, here, so cash that was paid off to acquire the plant. Okay, so that was a cash outflow. So any cash outflow you will subtract, any cash inflow you will have to add. So you have done cash outflow to acquire plant. So what was that? Is going to be equal to this one. Okay, so what was bought? So that is 1450,000. So 1450,000. This was paid. So I will have to subtract. So we have cash outflow to acquire the plant. So you will have to subtract, and then you also got some money, okay, cash inflow. So I will have to add what was the cash inflow that happened. So I will have to add cash inflow okay, due to sale. This was a cash outflow to acquire property. Then this was cash inflow that happened due to sale of plant, okay, that plant intangible asset. So that is going to be equal to, I got 125,000. So 125,000 I will add. Then we have to check out, there is one more intangible non-current asset like investment in the shares of the company. So there has been an increase, which means I have bought, cash outflows happened, okay. Here you can say I have bought shares in the company, okay, the investment in shares in other companies. So I have bought, okay, using this thing. So cash outflow, so less cash outflow to acquire shares. So that I have done that. So the value is going to be, what is the value? 1891,000 minus 1539,000. So let's calculate that. 1891,000 minus 1539,000. So that is going to be equal to 352,000. This is a cash outflow that has happened. So 352,000. So now let's calculate what is the net cash from the investing activity. So minus of 1,450,000 plus 125,000 minus 352,000, that is going to be equal to negative, okay, it is going to be negative of 1677,000. This was the cash from the investing activity, okay. Next we have to calculate what was the cash generated from the financing activity. Let's take it to the next page here, okay. So cash generated from the financing activity, which means through the share, debenture, or any dividend paid, okay, all those I will have to include in this one. So let's see here, net cash generated from the financing activities, which they would have done here in the business. For example, dividend payment, okay, let's include all that. So first one is the financing activity is the dividend payments. Redemption has happened, okay, redemption has happened, and then again an interim dividend was paid. Then further purchase of sale we have already done in the other company book, and then and also again the dividends were paid. So these are the things I will have to include. First one is on 18th May, okay, the first one is the redemption, and then we will calculate all the dividends paid. So let's see what was the redemption. Redemption means you are buying back the shares, paying money to the shareholders. Redemption of shares, okay. So it is a cash outflow, okay, it's a cash outflow when you have included this. This is cash outflow. So any cash outflow that has happened, you will have to less, okay, you will have to show it as decrease. So of 315,000, pound ordinary shares was made at a premium of 20 pence. So the total number of shares that was redeemed is 315,000. So the number of shares is 315,000 and they were redeemed at 1.2 pounds. The redemption happened at 1.2 pounds, not at 1, it was at a premium. So the total value is going to be equal to, so what is the value? 315,000, okay, 315,000 into 1.2, that is 378,000. So they paid, the company paid 378,000 to get back 315,000 shares, okay, into the business. Then the dividends were paid. So let's calculate the dividend payments, okay. So any dividend payments is a cash outflow, so you will have to subtract, okay, less the dividend payments. It is also going to result in cash outflow from the business. First one is a final dividend, okay, final dividend. So for 31st March, they have given 31st March and the rate is 0.028. Let's see what was the number of shares on 31st March. So they had 5,215,000. So that is going to be equal to 5,215,000 into, they were paid at the rate of 0.028 pounds. Okay. So this was a payment that was done. So the total amount that was paid is going to be equal to 5,215,000 into 0.028, that is 146020. Okay, so 146020 was paid, 146020, this amount was paid. Then to the shareholders, then okay, there was another interim dividend was paid at the rate of 1.1 pence per share or 0.11 pounds. Okay, this was a payment for the year ended 31st March 2023. So let's see here how many shares were there. Okay, there were 4,004.9 million shares. So interim dividend happened to them. Okay, interim dividend of 4,900,000 at the rate of 0.01. So that is going to be equal to 4,900,000 into 0.011. So that is 53,900. So let's write it here, 53,900. This was paid to the shareholders. So this was also included. Then here we can see that then on 30th March 2023, preference shareholders received their dividends in full for the year ended 31st March. So let's go and see how many preference shares were there on the 31st March. There were 320,000. 320,000 shares were there and they were paid at the rate of, okay, 6%. Okay, so dividend preference, okay, um, for preference shareholders. Okay, I will just write here in short. So there were 320,000 times they were paid at the rate of 6%. So that is going to be equal to 320,000 into 0.06. So 192,192 was paid. And then apart from that, okay, apart from that we can also see that the bank loan was repaid in full. Okay, repayment of bank loan. So repayment of bank loan. So any repayment is again a cash outflow from the business. So you will subtract. So the amount was 1.1 million. Okay, so that much you will subtract. And then you have debenture. Debenture was taken up, and so it is a cash inflow. So debenture received. Okay, so add debenture inflow. Okay, it is a inflow into the business. So that is about 200,000. Okay, now let's write. Okay, these are the cash from the involved in the financial activities. So now let's calculate what is the net cash generated from the financing activities. Okay, so that is going to be equal to minus 378,000 minus 146020 minus 53,900 minus 19,200 minus 100,000 plus 200,000. So that is going to be equal to negative 497,120. Now we have the cash and cash equivalents. Okay, we have to calculate. So net cash and cash equivalents. So let's see what is whether the cash and cash equivalents have happened. So first one is we got 2, you just add up all of them, 2,273,120, and there was a negative minus 1,677,000. Okay, and then you had minus 497,120. So you will be left with 99,000 pounds. So you just add up all the three. Okay, so that is going to be equal to this 273,120. So 273,120 plus this value from the investing activity. Okay, whatever the value you have got, so just calculate that. So 1677,000 and then 497,120. So you will add up all the three. All the three, you will get 99,000. Okay, now it has to get balance from the cash and the cash equivalents they have mentioned, because this is all we have included pure transaction. So cash and cash equivalents. Okay, cash and cash equivalents at 31st March 2022, or at the end of the last year or the beginning of this year, and cash and cash equivalents, okay, at the end of 31st March 2023. So the difference, okay, the difference we have to calculate. So let's take the ending balance and the latest balance and the beginning balance. So here it was 616,000. Okay, and the beginning balance was 517,000. So I'll subtract 517,000. Now let's calculate the difference between them. So that is going to be equal to 99,000. So we can see that both are balanced and our statement of cash flow is correct.